Let's talk about the key metrics that are driving the real estate market right now that nobody's talking about. Number of registered offers on properties in the GTA and the number of showings properties are currently getting. Hi, my name is Vas and I'm a chartered professional accountant turned realtor that's built and invested in real estate right here in York Region, Toronto, and in the secondary markets outside of the GTA. Let's talk about BrokerBay. This is a software database that's available to most top producing brokers right here in the GTA who have access to the number of showings, active listings, registered offers on properties, and a number of other things that are not available to the public. In this video, I'm going to go in detail in particular areas of interest to me, such as York Region, Durham, and Toronto condos in terms of how many showings are currently happening relative to the past and how many registered offers we're currently getting. These are all indications as to where the market is heading and what is to be expected over the short term. Before we deep dive into the data, I think it's important to note a few things. Number one, looking at average sales prices or average sales in general over the last 24 months is a bit of a fool's errand. Reason why is there's no seasonality. It's been so difficult to try to understand trends over the last 24 months simply because there have been a lot of external factors impacting real estate. For example, I believe we had roughly 3 official lockdowns, maybe 4. Those lockdown measures impacted the sales cycle significantly. I remember in April of 2021, there was a lockdown. I don't know if it was April 18th or 19th, but I was scheduled to put in an offer for an offer night for a property. And I remember the lockdown was announced by the Ford government. And I remember the schedule for that particular home was cleared. All showings got canceled. We were the only ones. My clients and I, we went through, we got the place for a really good price, and we've moved on since. But these things created these micro opportunities throughout the entire real estate market during COVID, where I can give you countless other examples where we can't really look at past data and try to extrapolate average prices or how does this make sense relative to average sales for the month because it's so scattered. What we are going to look at is 24 months since COVID started. I think it was officially March 16th of 2020. We're going to look at showings, and we're going to look at registered offers, and that's going to give us insight as to where we are now and potentially where we're going to be headed. Starting with York Region. So this chart shows York Region, mostly York Region East, so Richmond Hill, Aurora, Markham, Stouffville, Newmarket. And we're going to look at showings and we're going to look at offers. Now, as you can tell right here, we were trending at about 15,000 showings during 2020, which was a slow year. And then we peaked at 25,000 showings of March of 2021, and then we were at our normal, call it, and when I say normal, again, not normal for COVID, we were between 15 and 20,000 showings. Now, here's where it gets interesting. We peaked in Feb and March of 2022, price-wise, and what's been concerning now is how fast showings have dropped off in the last few weeks especially. As you can see here, we went from 25,000 showings right down to 15,000 for April. April's not over yet, but we've got a few days. But we're trending to be close to 40% down from what was the peak. This puts us back to, call it, just below average for 2021 showings. However, we're not done trending down. The interest rate hike news, the war in Ukraine, and inflation, this is all going to continue driving showings down and therefore offers as well. Now, how does this look in terms of offers? Well, it's a little bit scarier on this side because at the end of the day, offers are what move the needle. This is how we close deals, right? So during COVID or 2020, when it was very slow, literally nothing was happening in 2020. It was 500 offers per month on average for York Region Detached. Then that spiked up to 1,000 in 2021. During our peak, we were at 1,600. And now, April, we're at 592. So we're basically back to 2020 COVID numbers, except there's one more rate hike on June 1st, which is likely to be 50 basis points, and then who knows what else is to come. So this, if I was to suspect, is going to continue trending down. The only question I have is it going to be at this aggressive a trajectory, or will it be a little bit more gradual? In this chart, we're overlaying Toronto Detached, Durham Detached, and York Region Detached. During COVID, there was an exodus. Everybody was leaving Toronto. Toronto was dead. Downtown was dead, apparently, and nobody was ever going to go back to the office. Here we are now. COVID is unwinding. People are getting called back to work. yet the charts are still showing us similar trajectory. Although what I'm seeing on the ground floor, particular areas like East York and luxury Toronto, it's like nothing skipped a beat. The bidding wars are a thing. Showings are still up, offers are up. So Toronto is showing some resiliency, even though here at a high level, it is showing that it's dropping off. Now, keep in mind that Toronto coming from a much higher volume amount. So, for example, 40,000 showings, we're down to call it 28,000 showings. On a percentage basis, the drop is smaller than the percentage drop that happened in showings in York Region, for example. Durham is faring also a little bit better. York Region has been impacted the most, but Durham and Toronto relative to York Region are holding off. In terms of offers, the story is the same. We're following the same trajectory. The concerning part is that we're entering bearish territory, so offers are close to or at COVID 2020 levels. And I don't believe we're done with this drop. The only question is how long is this going to last and how much more scare is going to be put into the market when the Bank of Canada raises rates again, likely on June 1st. The last segment of real estate I want to touch on are downtown condos, particularly CO1 and CO8, which is downtown south of Bloor, east of Yonge, and west of Yonge. Condos were, call it the worst performers in real estate appreciation-wise over COVID because everybody wanted more space, everybody was selling them, and they wanted to move out, more land, more property. Now, what's interesting to see here now is you can see the graph for condos it doesn't have the peaks and valleys of detached. For example, during COVID, condos were the hardest hit. Showings were extremely low. We're under 10,000 showings. In 2021, the situation improved a little bit, but again, it was not material. And then at the beginning of the year, things really took off, and then we had the interest rate hike, and then we had the war, and then here we are dropping again. However, what is of note here, we did not drop to the old 2020 COVID levels. We're just back to 2021, which is still not bad, meaning that condos on a relative basis are outperforming detached. The only difference here is they never did that well to begin with, so the swings are not as big. I'm still bullish on condos. I think downtown is going to come back. It's just a matter of time, and it's the only affordable asset class in the GTA right now. And I also believe that people are going to start getting called back to work, and people are not going to want to commute from Tottenham or Barrie or wherever people move to. We're in a very different real estate market right now. Things are changing. There are so many different variables at play that it's very difficult to make any sort of sense of what's happening. However, we do have a few things in control. We have data that we can use to better understand our decisions and how to strategize if we're buying or selling real estate. Ensure you're using a realtor that has access to BrokerBay. And if you have any questions about BrokerBay or just the market in general in your particular area, feel free to call me or text me, email me. It's all in the description below. And I'd love to hear from you. I love chatting real estate. Thank you so much for watching and enjoy the rest of your day.